Let's talk about the FMCG sector and pull up some of the stocks there because we have seen both ITC as well as HUL trade in the red today. Very marginally though, we're not seeing very big cuts coming into these FMCG counters. Now, just last week, we saw Patanjali tie up with Future Retail for their products, for the sale of their products. To talk to us about this development, we are joined by Suruchi Jain, Equity Research Analyst at Morningstar India. She is joining us from Mumbai. Suruchi, thank you so much for speaking with us at NDTV Profit. Now, a foreign brokerage had already come out with a report saying that Patanjali has seen exponential growth, and if you look at their revenues for FY15, they are ahead of major FMCG companies like Jyothy Labs and even Emami. What do you make of this tie-up with Future Retail? How much will it impact their distribution strategy, and what kind of growth could Patanjali do going ahead?
So unfortunately, we don't track Patanjali, and I want to be able to comment on the details. But essentially, a retail tie-up is a first of its kind in the Indian, in the Indian market, in terms of like an official tie-up. And I'm not sure if this means exclusivity, but if it doesn't, it might be good for the brand. But otherwise, I think for FMCG, it's more important to get distribution in, the small retail shops, and I think going online is a great idea, but as long as there's no exclusivity, it perhaps would help the brand.
Suruchi, but what does it mean for established, entrenched FMCG companies like Jyothy Labs, Emami, and even larger ones like HUL and ITC? The products that Patanjali has, now they have even atta, biscuit, getting into juices, so competition for even companies like Dabur. Do large FMCG companies have something to be concerned about, seeing the kind of growth that Patanjali has done over the last few years?
So I think for the companies that we do cover are HUL, ITC, Dabur, Godrej and Marico. And so I think for homegrown companies that focus on sort of natural products like Dabur and Marico, this can definitely pose an important development and a threat. What we do think that, all of the companies that we cover, HUL, ITC, and Dabur, Godrej, Marico, all of them have an economic moat, which we say is a sustainable competitive advantage, because most of them have brands that have good recall with consumers, and consumers are willing to pay a premium for their product. And most of these companies have held relatively stable market share. Now, unless there's a niche that, Patanjali picks up amongst the entire FMCG space, perhaps in that particular niche product, they could gain significant share and, but overall, I think in terms of the overall pie, we've seen that in 2009 as well. Hindustan Unilever, lost market share just in a few niche segments to other players. But I think in the entire space, I doubt that the dynamics will change, significantly.
And what about a player like Future Retail? How does this tie-up sit in with the strategy? Because they already stock products from all brands. They even have their own in-house brand. What does it mean for Future Retail?
So, again, we don't track Future Retail, so I wouldn't be able to comment in a lot of detail. But it's essentially, I think retailers are I wouldn't say at the mercy of consumer firms, but the consumer firms definitely, make most of the economic rents in the entire space. So I don't think, having a tie-up with a few companies would kind of help a retail store. It has to have everything that the consumer wants. And in overall retail markets, I think the margins are much lower than a consumer firm. So definitely, I think usually the retailer is the price taker and they aren't able to get more than 30 days of credit in terms of payments, and that's mostly modern retail. So I don't think, in terms of the retailers, if one is looking to invest in, you're probably better off investing in an FMCG company versus a retail company.
Right. But is there any, competition between, Patanjali has been touted as a homegrown brand versus the MNC brands? Because, we've seen some regulatory moves coming against Nestle when it comes to Maggi, and then we're seeing, tie-ups of Patanjali with DRDO and new products coming through. Is there, by FMCG made in India versus by, FMCG which is MNC? Is there any such competition, and is this a healthy competition?
Yeah, I don't think the consumer really knows, whether the product is necessarily foreign or Indian. So I don't think a lot of consumers even know that, say, if a Vaseline lotion, which is produced by Hindustan Unilever, is actually produced by Hindustan Unilever. So for the consumer, it's the brand that matters and what the brand connotes. So I think Patanjali and Dabur, those kind of brands are natural products, and so consumers looking to consume natural and non-chemical products would end up consuming products from these companies versus people who are, all right with slightly chemical composition might, use the others. One, not to say, one is better than the other. It's just preference, and so it all depends on consumer preference. What we've seen in the past is that Ayurvedic, natural, organic products, all of those are niche markets, and they don't end up, forming the majority part of the pie.
And one last question. In the end, we are seeing the start of the second quarter earnings season. From FMCG companies, what will be your pecking order? Which company do you see performing the best?
So I think in terms of performance, I think overall it will be volume-led theme for growth this quarter as well. I think there are a lot of promotions and discounts that companies have undertaken in order to pass on the lower input cost benefits. This quarter, though, I do feel will be one of the last few to get that commodity inflation benefits, and margins I think should start normalizing going forward. And I think in terms of future challenges, I think it will be the companies that will be able to raise prices going forward. In terms of overall which companies will do well, I think it's a game of product mix. Right. And so I think while HUL has some really good products where they're able to earn high margins, mainly in the personal care, their overall margins will really be a determinant of whether their personal products will do well. Similarly, I think for Marico or for Dabur, they have certain parts of their portfolio where they haven't needed to reduce prices. So, I mean, Dabur hasn't reduced prices much at all. But then their volumes, might suffer. So I think it's a mixed bag. And but in terms of definitely pricing, I think all consumer stocks are currently quite overvalued. And so at the moment, we're not recommending any of the consumer stocks.